full-time orthopedic surgeon and real estate investor and entrepreneur. Thank you so much for joining us today, George.
Thank you for having me, Shameem. It's great to be back with you, talking all things physicians, medicine, and investing.
Yes, and there's so much to talk about. You've done so much in the last 10, 15, 20 years. How long have you been doing
Yep.
all this?
So my orthopedic career started in 2008, so over 15 years. And then my investing career started in 2016. So just under 10 years for that.
So fabulous. And we went on a property tour with you a couple of months
Yep.
ago. How is that going? How's your project?
Good, good. We're excited about the first distributions that went out in November. So that's always a good feeling to start to deliver on our promises and our projections, I should say, not promises, but it's always good to start that pathway and seeing the realization of what we projected. So really happy about that fact.
So, George, tell us about how you found that property and what makes this multifamily work versus the others. Like, what was different about this one? Because I know multifamily is struggling right now.
It is. It really is. And I can attest to that because it took at least a year before I've invested prior to that one. So I had been waiting for the right opportunity. I heard, many rumblings about, the coming crisis in commercial real estate and thus multifamily with higher interest rates for a lot of these properties and then becoming distressed, not necessarily the property as far as its performance, but just the capital stack becoming distressed. And that's what happened with this case, with this opportunity. It was a distressed capital stack. They could no longer afford to pay the high mortgage rates because they had such a high increase in their debt service. And so that presented a huge buying opportunity for us. They had to essentially discount the property in order to sell it. And we were able to acquire the property for a very low cost basis. And that made the numbers work and it made it in our favor. So typically we have to go in and add value by renovating and improving and increasing the value and the finishes and raising rents. But we didn't even have to do that for this property. We bought it at such a good discount that it was already cash flowing from day one. So that's what really attracted me to this property, waited patiently for those opportunities to come. And I'm looking forward to more of those opportunities in this year and the next year.
Yeah, that's what I've been hearing. There should be a large amount of distressed properties on the market pretty soon, and a lot of people are gearing up for that.
Yeah, it's interesting. I thought it actually would have taken much more of a bigger picture of the last year of 2024. But what we've seen is that a lot of banks and lenders have been working out loan modifications, essentially trying to give the current set of operators more time, like a year or two, to try to wait for circumstances to be better as far as interest rates. That may or may not happen, and so now we're kind of getting to that point where a lot of these properties may end up coming on the market for discounts.
So I want to transition and talk a little bit about how you as a doctor are finding time and what are you doing to, invest in real estate or alternative investments. What do you do and how do you spend your time?
Yeah, that is one of my favorite questions to answer because when I was employed for the first 7 years of my career, it started off slow, but then it became very busy. Just the traditional medical model pushes volume in order to, make enough money to keep the lights on, as they say. And so I really became strapped for time. And once I started becoming interested in real estate or investing in general, I realized that I had to reprioritize how I spend my time if I wanted to have enough bandwidth and have enough time to learn about these concepts. Because as you know, as physicians, we don't get training on any of this. We just learn medicine, which is, important, but, we have to make our own time while we're practicing in our busy careers to learn and practice these investing ideas and concepts. So I started looking for moments in my day, in my work day as a physician to learn. And for me, I had to identify my optimum learning absorption style is the term I like to phrase. And for me, that's audio visual. So it's podcasts, it's YouTube channels, those type of medias, going to and from work was a 30-minute commute each way, leverage that time, before it was just maybe listening to music or, listening to an orthopedic related, podcast or just a regular audiobook. Now it became like learning time to dive into some of these really good podcasts and subject matter experts that are out there. It became a favorite time of my day. I was shuffling between 3 different clinic sites at any point during the week, sometimes each day, and those were 10 to 40-minute drives each. And so those were again learning time for me. I'm a surgeon, so there are what we call, downtime between cases, when one room is getting turned over before your next case. So we call it turnover time. Unfortunately, for the practice of medicine and my practice, I was starting to notice it was taking longer and longer time between cases just because of the inefficiencies of those big hospital systems. Well, before I was just watching TV or eating or waiting, complaining. And now I was popping in my earbuds. My phone had all the podcasts and YouTube topics that I wanted to dive into, and I would just sit in the surgeon's lounge and get my education right there. Of course, after work days, if it's a surgery day or a clinic day, if I get out early enough, I would go to local meetups. Those are usually around the 5 to 7 p.m. hour. And spend an hour or two networking, listening to a presenter, a subject matter expert, come talk about different real estate concepts. So really maximizing the downtime of the day. I know we're busy physicians, but if you really, really look at it, try hard and make that intentional effort, you'll realize how much free time you do have throughout the day to devote to this endeavor, and you learn quite a bit. There's so much information out there. That's kind of how I started to learn.
Do you have any recommendations on which podcasts or resources?
Yeah, I think, like medicine, it's like learning a new language. So starting at the basic, levels of just some kind of introductory content to learn how to start in speaking the language of investing is good. So I think platforms like Bigger Pockets do a real good job of making it digestible for newbies. I think the real estate guys, they also do a great job at that. They're real estate focused, but they're two really good platforms I think can help. I also think when I started, there was no available AI. I think AI is now maybe even better than either of those platforms just because of the sheer computing power. You can specifically tell AI to interpret this or translate this at a level that I can understand as a physician. And it really will do that. It could do that in a text format, or it can do that in even in an audio format. So this is super powerful. I even use it to this day, or I use it today now for many things, other even outside of investing. But I think that's one real good way to leverage technology in order to start understanding the language of investing. And that's the building blocks. You have to start there and then move on to the more nuanced platforms where you can follow along a lot more clearly.
That's fascinating, the AI concept. I know there's a lot of talk about AI and how it's going to change the investment space and basically underwriting or evaluating deals, I'm guessing. I
Oh,
haven't tried
totally
it at
will.
all, so
I tried it last week. It was remarkable. I looked at a warehouse, an industrial warehouse here in Houston, and I literally just typed in the address and asked, the AI to evaluate this property for me for this purchase price. And it literally was able to look up multiple sources and give me an analysis, not only a market analysis, but a feasibility, gave me ideas on what I could use the property for. And it did it in 2 seconds. It was just absolutely remarkable.
hope to change the
It even created a cash flow model and an underwriting model for me that I think could use more work, but maybe that's just my, knowledge gap on how to prompt it. But it created charts. It was remarkable. It was absolutely remarkable.
Wow, that's pretty exciting. So that helps us a lot, especially limited partners. I think that could really help someone like myself if we're thinking about investing in a syndication to take a quick look,
I agree.
see how this is. Yeah.
I agree. It bridges the gap. It makes the barrier to entry a lot easier, a lot less intimidating, especially for us physicians, because, we kind of have a hard time going to ask people for help. Well, you could go ask AI for help. That's a little easier, maybe.
A great point, actually. That's something that I'm working very heavily on is creating access to experts. We're creating this online community and I agree. I think it's really hard for physicians to get help when they need it. And we feel like we have a target on our back. People are just looking to make money off of us. And at least that's how we perceive it. And when we go to a financial planner or wealth manager or any of these or even tax advisors, how do we vet these people and how do we get to the right people? And that's really been my focus. So now tell us, I know you have an active project. You have this syndication in Houston going on. How is that going? What is your plan
So
projection for that?
we are now 8 months into that. We closed in June of last year, so coming on 8 months now. Really excited about this opportunity. We are just about 8 months into it. We closed in June. It's a local property here in Houston. It's 405 units. We bought it at a great discount, so it's cash flowing from day one. We have a very conservative business plan where we don't have to go in and do super heavy lifting in order to make the project successful and profitable. And that, I think, is evidenced by the fact that we started making distributions to our investors in November, shortly after closing. And we are, looking forward to the rest of the business plan over the next 2 to 3 years as the supply and demand of available apartment units becomes skewed over the next few years. We expect to see positive support and rent growth. There's just not a lot of units, and there are a lot of demand in terms of people and families moving in from the coast, from California, from the East Coast, and so that's just going to put upward pressure on the rents, and it's going to support our business plan. We may get to the point where we start renovating units in order to upgrade. It's not a necessary thing that we have to do, but we have that option. We have a lot of reserves that we built into the project. So a lot of positive just check marks on the checklist of why we're excited about this property.
Well, that's great. I'm so happy for you. I'm glad it's working out. We look forward to your next syndication so we can participate.
Yeah, absolutely. We patiently wait though, and we partner with really best in class operators. It's a team effort for sure. But I think my my superpower is patience. Even though there's that urge to kind of get another deal going, I have way more patience to wait for the right deal.
Now, tell us a little bit about your entrepreneurial journey. You started your own practice outside of the hospital. And
That's correct. Yeah. After my employed career, I saw the writing on the wall of where medicine was headed, and I just wasn't happy with it. And I think that resonates with a lot of other physicians and healthcare providers, whether they be nurses, pharmacists, physical therapists. I talk with all of them. I interact with all of them, obviously, on a day to day basis. So I know they're feeling the friction. And I saw that writing on the wall within 2 to 3 years of getting out of training. And I looked for a exit route in order to not just leave medicine. I don't think that's what we need, on whole. Totally fine if some folks are, just want to, exit, and some folks obviously want to retire. In whole, I think we don't need less providers. We need more. And we talk about supply and demand. That's a big shortage, right? And I went into this thing wanting to provide, right? And so I saw the best way to do that was to start my own practice where I maintain my own autonomy. No middlemen to interfere with the physician patient relationship. And that includes insurance companies, hospital systems, even the US government. I wanted that true physician patient relationship and everything else supported externally. And so, in order to do that, I know I would be taking a big risk, not only just starting my own practice, which is hard enough in and of itself if you run the insurance model, but I wanted to start a direct pay or orthopedic practice. So, we have no insurance. It's been 3 years. We just passed our 3 year anniversary. We have no insurance contracts. We only contract directly with patients or with the employers who sponsor and fund their health plans. And so, in order to make that big of a leap, which added another layer of risk to that endeavor, I knew I would need some passive streams of income. I knew it was going to be a heavy lift and a slow growth before we hit, that exit velocity speed and start growing. And so that's where the investing really made sense to me, was to make sure I had robust sources of alternate income, not just passively, but even actively, having the flexibility of doing locums. And I know that's something that many docs do now. But I've leveraged that as well. I've leveraged the ability to travel at my own time and at my own pace, and do locums assignments, bring in income that both supports my life, my entrepreneurial journey, and my investing journey. So that's kind of how I balance all of that together.
amazing. So excited for you. You're just all over the place.
Yeah. I think it's my personality to kind of, just be curious about what's out there and accept and embrace the adventure and have a good reason why. And that makes it a little easier to take on some of these big tasks, and the why I think is strong, it's be a better physician and help more patients, help more people, and now to help more physicians.
Thank you so much, George. That was a wonderful conversation. I hope to see you back soon.
Absolutely. Thanks for having me again. And best of luck to you in all your journeys and endeavors.